Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
So Lauren, we just this past month finished up the first quarter of 2015.
That's right.
And so there was an article in the Seattle Times that was headlined "Anemic Performance for Major Stock Indexes for the First Quarter." And
Right.
so we usually don't talk about returns, especially on a short-term basis, because really they're meaningless.
Right.
Would you agree with that?
Oh yeah.
Yeah. But last year we spent quite a bit of time talking about why foreign indexes were negative,
Right.
and while the U.S. indexes were surging. So I thought since we had a little bit of a reversal this first quarter, we'd talk about that. And what they said is that the Dow Jones Industrial Average fell about 0.3% for the first quarter.
Okay.
The S&P 500 was up about 0.4%.
Okay.
And then the Nasdaq was down 0.9%. Okay.
Okay.
Now, I don't like to talk about returns specifically with our portfolios, but I will say this, is that the foreign indexes had a great quarter, comparably. In fact, our foreign portfolio, I'll pick on one portfolio net of fees, was up 3.61% for the quarter.
Right.
And then the U.S. portfolio, which has small companies in the portfolio, was up net of fees 1.81%. So what's your take on that?
Well, I think my take on that particular instance is just that over the first quarter, not much happened. Going up or down 0.5% or 1% over the space of the time of a quarter is practically the same as zero, because by the time you're watching this episode, it'll be something.
Right.
Something different from that. So at the time we're filming this, essentially the major U.S. stock market index is just flat for the first quarter. And I think, as far as the foreign markets going up, well, it's the same thing we were talking about before. They always have been going up.
Right.
The only issue was that because the U.S. dollar was so strong, that you didn't get those gains when it was translated back into U.S. dollars.
Right. Yeah, so it's a good point. And then the thing is that, again, it's really meaningless when you're looking at one quarter. We really want you to look at long-term asset allocation and diversification. But I just thought for that very small window of time, it was interesting, where it kind of shows that whatever happened in the past doesn't mean it's going to happen in the future.
That's right.
And that really the benefits of diversification is you don't want everything to go up and down at the same rate. So that's really hopefully you get the takeaway from this. We're not bragging about our performance. Don't take that from this episode. So thank you for watching this episode of Erickson TV. If you have your portfolio predominantly all U.S., let's say large company growth, we may want to talk in the future about having better diversification in your portfolio. Thank you very, very much for watching this episode of Erickson TV. Bye now.
See you next time.